Welcome everyone to our daily Forex market analysis for May 11th, 2017. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. Okay, let's start by taking a look at our calendar. So not a whole lot of news that came out. The important thing was ECB, we had Draghi speaking. He didn't really say a whole lot to lift the euro up. Basically, essentially what he said was that they're not going to taper their asset purchase program. At this point, he does have more confidence in the economy. It's doing better than it was before. However, they're not going to raise interest rates or cut their asset purchase program. At this point, I think, especially with the elections coming up in the UK and just the French elections that just kind of passed, I don't think ECB is really looking to rock the boat at this point. So I think they will probably start talking about cutting the asset purchase program in a few months' time. Essentially, as kind of time goes on, they'll start talking about it. But I do not expect them to do that just yet. So keep that in mind. Crude oil inventories, we saw that there was a larger drawdown than what was expected. They were expecting a drawdown of 2 million barrels. However, it was 5.2 million. As a result of that, oil jumped up and dollar CAD dropped. So that was the direct news there. Other than that, main news here was the New Zealand dollar. It was the interest rate, which stayed the same. They did not change it. And then interest rate statement, as well as the press conference from a Reserve Bank of New Zealand. So in this one, they didn't really, they were not bullish. So it was more dovish than expected. So as a result of that, we are not, we didn't see, or we saw a big drop. I was going to say we didn't see a rise. We saw a big drop. So they're not, so that there wasn't, and that was to be expected. We weren't, I wasn't really expecting, the reason we called the New Zealand dollar short trade today was because this is the result that I expected. I was not expecting the RBNZ to be hawkish at this point. I thought they would be more neutral than anything else. And with everything else, the geopolitical risks and everything else going on in the markets right now, I do not expect them to be raising rates at this point. So hence our the short from this morning. And then we have another news to note here. Moody is downgrading Canadian banks. So that is not good news for dollar CAD. And we saw that dollar CAD, which had dropped because of the oil inventories, has actually shot back up now. And that has to do with the Moody's downgrade of Canadian banks. So Canadian banks have actually enjoyed a really a good run over the last a number of years after that crash, financial markets crash that we had. The Canadian banks did not get impacted as much. They actually, Canada came out of this in a pretty good shape, in a decent shape. As a result of that, Canadian financial system is kind of touted as to be one of the better systems because it is, well, it is regulated, but it is also very, there are strict kind of rules and stuff around it. As a result of that, we haven't really seen big dips in Canada, at least in the financial system. So now Moody's is coming and downgrading Canadian banks. So this will have negative impact on dollar CAD. So this is another thing that is negative for Canada right now. So dollar CAD could go up even higher. So things that are stacking up against Canada right now are Trump with NAFTA. He wants to renegotiate it, or at one point he just wanted to just toss it out altogether. That would have had a really negative impact on Canadian dollar, which means dollar CAD would have gone up. But now he is after the phone calls from Mexican as well as Canadian prime ministers here, he has changed his tone and now he's willing to renegotiate NAFTA. So that's slightly positive, but overall, just the whole renegotiation of NAFTA will have negative consequences for Canada. So that's bad for Canada. Oil has been dropping, which is also negative for Canadian dollar. And now Moody is downgrading Canadian banks. So that is another thing that is negative for the Canadian dollar. So all in all, Canadian dollar is getting hit. So Canadian dollar against other strong currencies may be a trade to keep in mind, that we could likely see this going up. So dollar CAD is one, but we could do like pound CAD. We could even do, let's see, I was going to say Aussie CAD, but maybe we should stay away from commodities at this point. Euro CAD, pound CAD, all of these currencies could be looked at against the Canadian dollar. Okay, so moving on to, oh, sorry, I forgot to look at what's coming up. Oops. Okay, so coming up, we have next, we have Governor Wheeler speaking here, but the main thing is tomorrow. Tomorrow, big day for British pound. So British pound has been holding that range now. And one of the reasons is tomorrow we have Bank of England inflation report. So inflation has been going up in UK. As a result of that, some participants in the market are expecting Bank of England to become hawkish. However, with everything that's going on with Brexit and everything else, I don't think a Bank of England can be hawkish at this point. So they may be neutral, if not dovish, so tomorrow. But again, so this will have big impact on British pound if they are, there was one person who had actually voted to raise rates among the MPC members here. So one person had voted to raise rates, 8 wanted to keep things as they were. So now it is expected to stay the same, but nonetheless, the commentary will have an impact. So how they vote will be one thing. The second one is the monetary policy summary. So this is what the market will be paying attention to. If they're hawkish, British pound will go up. And if the inflation is positive, then the market will start expecting BOE to react at some point. As a result, that will be positive for the British pound. So very, very important for British pound here. Then we have manufacturing production numbers out of the pound as well, out of UK, sorry. Into the US session, we just have the unemployment claims and PPI data. And that is pretty much it. The rest of it, actually Bank of Canada review here will be important as well. So Prasad, in terms of the in terms of pound dollar, I don't think we will really see the move upwards fade a lot till after the elections. You know how we had going into the elections, euro was getting pushed up. I think we are likely to see pound kind of hold certain levels or stay up there at least. We may see pullbacks, but I'm not looking for a big drop in the pound dollar, especially going into the elections. After the elections, then we'll have to see how elections turn out, which will then give us the results. But right now, I'm not expecting the pound dollar to move to fade. I think it is going to stay up there. All right, so let's move on to the charts. Looking at Euro US dollar here, very, very neutral move for the day. Nothing happened really. Prices pushed up a little bit, dropped, and we are still in this range that we have been in for that we were in previously. At this point now, we will treat this as neutral, but it is sitting lower, closer to the bottom here. At this point, we are looking to see what happens. So we're going to treat this as a range-bound market. If it comes back into the bottom here and pushes off to the upside, we'll have to keep that in mind. Right now, though, if we take a look at it, it is doing a bit of a triangle to the downside. So normally when there's a triangle, so the likelihood of the move that we could normally see would be one of these: price drops, or actually price does one of these. It kind of follows this little triangle, then drops, pulls back, and then drops further. So that's what normally happens when we have a triangle like this. However, again, this is the bottom of the range, so we have to be cautious because we could get one of these moves. In that case, we're likely to just go up higher like this. So keep that in mind. I would treat this as a range bound move and wait for price to give us a decisive break. If the price does break though, and this is where, Walter, you've been doing a great job of catching the breaks. So this is where, if the price breaks here, we are looking at this support and resistance level here, 108.20. So we could get one of these drops here. Let me just clear this. So price drops through, there's a bit of a pullback, and then we're looking for this move. And once that happens, we may see another one of these, and then we have this entire inefficiency open. So it could give us a large move. It may not happen all at once, but a break of this can be, there's a vacuum right here. So we could get that nice move to the downside. The risk, though, is that because it's the bottom of the range, it could push up from there. As a result of that, we'll treat this as a range-bound market. So we're looking to, we have to wait and see what happens at the bottom here. If it holds the bottom, then we're looking for a move up to the upside from here. But once it breaks, then we can sell this, and looking for price to come back into this here. So first 108.20 and then into a 107.50 level right up here. Pound here, we have a pin bar. Price has been trading in this range, upper range here, hasn't broken down, but prior to Bank of England or after BOE, we could see this drop. So the target, the first target is 129. Below that, we are looking at a 128.30 or this level, 128.30-ish level. That would be the second target to the downside. But again, if for some reason Bank of England comes out positive and it breaks up, then we are likely to see it go all the way up here. So actually, let's mark that. We'll leave that on the charts here. We could see this move all the way up 130, 120 area. So that will become open. So keep that in mind. So this is a larger range here. The range is between 129.87 and a 128.30 level. At this point, we have a rejection of the top. So we're looking for price to come down lower in towards the bottom of the range here, towards the middle and then the bottom of the range. If we take a look at the 1 hour chart, this is what the price was doing. It was holding below here, and then it pushed up. So it was a big chop. New York was big chop. There was really nothing to trade here. So it wasn't the best pair to trade. I was looking for a break to the downside into 12900 level, but it did not hold below. So now it's slowly coming down, but hasn't moved much today. So first target is 2900. If that gets taken out, then we are looking at into this 128.30 level right here. Okay, so that's pound. Dollar CAD here. Dollar CAD has been in this range. Today it looked like we may get a break of the range, but then the Moody downgrade did not help. So we got a big push up. This was a nice double bottom here, nice double bottom here. And now we have seen that big push to the upside. We did see a quite a nice drop here. See how price was holding below the pivot point, and then a nice drop right drop right into the bottom, towards the bottom of the range here, but now it has pushed back up. This was a very nice engulfing candle, and since then it has pushed up. So at this point, this is a range bound move as well. So looking for price to stay between 137.90 and 136.40, unless we really see something big happen, like let's say the oil completely reverses direction and starts pushing back up, then dollar CAD could come down. So keep that in mind. So there is an internal level here though, right into here. So 137.20 or 30 level, this one here. We could get, if the price does not break above this level, we could get a reversal here. So we could see one of these moves and the price comes back in towards the middle of this range now. So we do see lower highs here and lower highs, but again, this will be the important point, 137.30. So if you go take a look at the 1 hour chart, let me clear that. So here, this level right here, this is important level. 1, 2, 3 times price tested this level. It did go into this 50 level once, but it has held this level. So we could see one of these and then drop here. So, watch out for that. At this point, we'll trade this as a range bound market. Aussie dollar here. We are struggling with this 73.30 level right over here. Price pushed off of this level, and now since then it has come down because of New Zealand dollar dropping. Usually when New Zealand dollar drops, Aussie tends to drop here as well, but Aussie is not looking as weak. It is into multi-month lows though, so once price has moved down so much, normally there's a reaction, and it looks like price is reacting to this level right here, 73.30. So we'll watch out for this. At this point, it's more likely that it will come and test the bottom and then push back up again. So I would be careful with this level. If the price breaks through, only then we'll have to look for a break below this level to take it further lower. The next level below this is 72.80 level. At this point, though, I would be careful with this. Same thing, I would wait for a break and then get involved in the trade. I'm not looking for price to just drop through this very rapidly. I think this break would be a little bit slower in coming, and it'll be driven as a result of New Zealand dollar trade than the Aussie weakness itself. It's just that commodity currencies tend to kind of align and they tend to move together. So New Zealand dollar here, we saw a big drop. Price did hold up there into the range, but then we had this big drop as a result of Reserve Bank of New Zealand there monetary policy statement. So at this point, we could see a pullback into 68.60-ish level, or somewhere into here, 68.55. The move that I would expect here would be a bit of a pullback, because this is that kind of move. Now, though, based on this move, we are bearish, but it has moved quite a bit. So keep that in mind. That's a huge move, and it could get filled. Keep that in mind as well. It's such an inefficient move. There's big vacuum here, so price could just go all the way back. I would be careful. We're trading the New Zealand dollar at this point, so just keep an eye on it if you're in this trade. Right now, it dropped, and now it's holding the low, dropped further. Right now, it is holding this low. See this low, but just keep this in mind. If it starts going up, this inefficient move could get filled. Overall, though, outlook is bearish. Pound yen. Pound yen is becoming smaller. The moves are becoming smaller. We are still bullish. Yesterday we were bullish. Today it's a bullish candle close. So we are still looking for another bullish move higher, 148. 45 level is the high. Here, I do expect sellers to be sitting there with the orders because we haven't seen, again, this is multi-month highs, so we could get a reaction at this level. So at this point, looking for a move higher, and 148.50 is where we could see a double top type of formation. Unless it, for some reason, just breaks out of this decisively. It could break out based on Bank of England. So pound pairs, we would have to be careful with trading them tomorrow. So as we can see here, for last couple of days, price has held this level here. Right now, it's holding the highs, previous highs, and it's trying to push up higher. So this looks bullish at this point. 148.45 level would be the target. Dollar CAD here, we did manage, in spite of this pullback, we are looking bullish still. We did manage to close bullish. So again, the candle is, it's a bullish hammer, bullish pin bar here, just like this previous one. So at this point, looking for another move to the upside. But I would be careful with this one here as well. The yen crosses have been, based on the North Korea doing nuclear tests, we saw that drop, and now it's pushing back up. So we are bullish. 148.80 would be the next level to the upside here. And here it is still holding the high. Looks like it wants to push up higher. So looks bullish. Euro yen has been range bound, and we are still looking for a range bound move into this. It would have to break above this 124.45 level decisively for it to move up higher. But because euro hasn't been moving up higher, this euro yen hasn't been either. Pound dollar, on the other hand, has been much stronger, and as a result of that, pound yen has been much stronger. So those are, so this one, I would say neutral on this, looking for a range bound trade. 124.50-ish level will be where we are looking for a double top type formation and maybe a pullback into the range. If it comes down into 123, looking for a move to the upside off of that. We could get move into 123.50, and we could see a long trade from there as well, but it would have to, we would have to keep an eye on it and see how this happens. So this is the move we could look for at 123.50. If it does have a deeper, but this is the actual ranges right up to 123.00. So right into here. Okay, EuroCAD. EuroCAD had been dropping, and now we have seen it push back up. This is from, we did come into support here, but it was also with the downgrade, Moody's downgrade, that has made this move up. Overall, though, based on this candle close, we were bearish, but now circumstances have changed. So fundamentals have come into play here. With Moody's downgrade, this would be bullish. So at this point, looks bullish. This looks quite bullish, and we could see the price go up all the way into this 149.80 level. So we'll keep that in mind. However, this level looks good here as well. So we could watch the price here and see what it does. It could reverse from here and start moving lower because euro itself is not that strong. However, this is a better level. 149.80 is a better level. If we were going to look for a short opportunity in this, I think that would be a better level. Euro Aussie here, candle close was very bearish, and now we have pushed up because Aussie dropped. However, it still looks like it wants to move lower, so this is bearish. Target we're looking at here is 146 or 14700. So looking for a further move to the downside. Here we are in our 1 hour chart here. So we do have multiple pins here. So once price breaks below 147.63-ish level here, we're looking for price to move into 14700. and that is the important support and resistance area. Then if it breaks, then we could see it come lower, but this is a first target, 14700. Okay, New Zealand CAD, a big drop in New Zealand CAD. Hasn't really been doing much. It's just been going sideways. So now we have actually broken below this immediate range that we were in. This was the range that it had been trading in. It has dropped through there, and now we are into the bottom, right into the bottom of the support there. It looks like it's pushing back up from there. So we could get price move all the way over here, so 94.20 level, and then we could see a drop in this. So we could see one of these moves and then a drop, or we could see price fill this inefficiency all the way up here and then see a move to the downside. But right now the move is more of an inefficiency fill move to the upside, and this will be the first place to look for continuation move to the downside. Aussie, New Zealand, a big, huge push up here. We were enjoying this nice ride to the downside. We have been calling this a down move in this for a number of days now. However, things have changed now with the New Zealand dollar, you know, what the big drop there. Aussie, New Zealand, of course, it reversed this whole big, all of this in one day. It is into resistance here, right where it is. Could go even higher into these levels right here. See this pin? So that's so 107.90 level. So we'll keep track of that. And again, we could get this inefficiency filled. So bear that in mind. So we could see a move down here. Price to move, start moving lower. I do like this level here. That's a nice level, 10800 or 108, yeah, 10800 right there. But the next move we're looking for is inefficiency. So if you could get a bearish engulfing close here on the 1 hour, we're likely to see price come back lower. And the first place to target will be this, well, not the first place, but a good place to target could be this. So 106, let's say 106.80. And then we have Euro New Zealand. It was coming down nicely. We did have a bearish close here based on the last couple days closes. We were looking for bearish move down, and now we are into support, but since then it has pushed back up. Support and resistance, this is a good level right where it is currently. Again, we could see this inefficiency fills. So that's something to keep in mind today with the big drop in New Zealand, especially since it happened at time when markets were the gap time, in the gap time when the market participants were awake from their desks. So we could see this inefficiencies filled. So bear that in mind. Same thing with pound New Zealand. This one is slightly different though. It has broken above the highs. So this looks quite bullish. I would not be wanting to short this one. I think Euro New Zealand is probably a better one, or Aussie New Zealand, maybe not even Aussie New Zealand, but I would keep an eye on this because that could come down. Both commodity currencies, neither one is really doesn't really have any, neither one has strong fundamentals, let's put it that way. Euro New Zealand, same thing. Euro's been pulling back, and we could get this inefficiency filled. That is quite possible, because look at the huge move, look at this move up here and that move, very, very inefficient move. So any of the New Zealand crosses, we're looking for inefficiency fills. Pound New Zealand, like I said, it could go higher. It could go into this level right here, which is 1.9050 level, right up there. So this one still looks bullish. In this one, we could see price pull back into this level, 1.8859 and then another move to the upside. So if you take a look at the 1 hour chart, this is what it looks like. So this is where, see where the price pulled back and took off. So this looks like with all the pins up there, it could pull back, but I would be looking for this level, 188.59, this level here for a pullback, and then we'll have to see how it reacts at that level. Okay, so I think we have covered all of the pairs now that I have. Any questions or comments on this? So the main play here is the gap fills. Gold, let's take a look at gold. Gold is looking bearish still, but it is getting smaller. So the move here is 1214 will be the first target. So it will have to break below this pin for it to move lower. But based on the daily close, it does look bearish. And the next target would be 1207 right up here. Oops, yeah. Okay, here we go. So 1214 is the first one. But again, it is starting to come into these lower levels. See how the candles are getting smaller, which means market could turn at this level. So I would be kind of looking for or being vigilant for a potential turn in the market. If you look at the 1 hour here we are into the bottom. So this is the first 1214, is the first target. Second one is 1207. Oops. Yeah, so this one here, but it could come all the way down to this. So 1200. Wow, we haven't been there in a while. All right, so that's it.